Hello guys, welcome back to my channel. Yesterday there was an earnings release from the company called Cadeler. It's the energy player which is involved into wind energy specifically, and this is one of the stocks from my portfolio, relatively big, around 10% of it, so it's very important for me. And let's go through the main points of the presentation. So the highlights were, they mentioned that they had solid financial performance with revenue and EBITDA more than doubling year on year. New build program is on track with second A class successfully delivered. Then again, they acquired the company called MENCK, which used to be the private company, and it's about the specialized equipment for the wind turbines foundations. They managed to deal with the Chinese shipyard for delivery of new 2 T-class vessels. So this how the fleet image looks like at the moment. Just to remind you, at the moment they've got 11 vessels, and each of them is mentioned here what they are doing at the moment. So just for example, Windsilla is at Revolution Wind project in USA. By the way, this is the only vessel which works in USA at the moment, and then you can see how they progress globally. What's important, of course, it's the backlog for the company. So now it's just a backlog, but it can turn into the revenue. As you can see, the vast majority of the backlog goes or belongs to European geography. 87% of the potential projects are within the Europe, then 8% in Asia, and only about 4% go to North America. You can see here some more agreements: 3 undisclosed client wind turbine generation, then undisclosed client for the foundation and wind turbine generators, and again few more undisclosed clients which are not in backlog yet. Let's go to the numbers. So let's have a look. Now the company, which has roughly 2.5 billion of the market cap, has more or less equal backlog. Yes, it's been reduced a little bit in comparison with the previous year, but I don't see this decline as a major one. But what's worth mentioning is that the backlog is still extremely strong for this size of the company, and for me personally, one of the modes of the thesis why I hold this company in my portfolio, these exact reasons. So I think that the company is undervalued based on the future potential earnings. And what's important is that from this whole backlog that's recorded for the end of the August, that the 77% of total backlog has reached final investment decision, which basically means that it's been confirmed. However, I highlighted here that when they mention these numbers, they say that the contract backlog assumes 100% of counterparty options are exercised. So it's including the options. Then again, this number for me, as for the investor, of the company. This high backlog is very important, but when I see other agreements that been reached recently, and this is not just one, there are quite a few, have a look, they are not included in the backlog yet. So you can imagine the potential of the further earnings if we include those ones. Next, let's have a look at what's going on in the fleet. First of all, the company reported for the first half of the year, which ended in the end of June. At that time, the company had only 10 vessels, then one more was delivered, and now it's in the progress of construction another A-class vessel, which is called Wind Apex or Apex, and it's going to be delivered by Q2 2027. And at the moment 65% of construction is completed. Looking at how the company has been executing or performing before, they usually stick to their guidance. They usually deliver in time or ahead of schedule, so we can trust these numbers, in my opinion. And exactly what I've been mentioning just now, is that Wind Ace, that's the 11th vessel, delivered ahead of schedule and on budget, which is essential for us as for the investors. Let's go to some numbers. First of all, let's have a look straight away to the key takeaways here. That the revenue for second quarter 2026 more than doubled. Okay, this is our quarter, and this is what was a year ago. So from the first look, you can see how can it be that it's more than doubled if the numbers are not saying that. The reason is that 111 million we can deduct from here. It was just a termination fee that the company received previously. Then what's important, yes, the revenue more than doubled year over year. However, if you look at the cost of sales, it's increased significantly, around 3 times, and it might worry us investors. And they also mentioned the reason for that, which is very logical. So they saying that cost of sales increased by 93 million, driven by the full quarter operating cost base of 3 additional vessels, compared to 7 operating vessels in Q2 2025. First of all, have a look how the company has been progressing. A year ago, the business had only 7 operating vessels. Now the company has 7. What a jump. And obviously, when the company has been delivering such heavy capital assets, obviously the costs will arise. And like the brand new vessels, when they being delivered, they don't go straight away to perform the project. The revenue is typically being shown within 6-9 months after the vessel is being delivered. So obviously the costs will arise when the new builds just come into the fleet. So this rise to cost of sales does not worry me at all in this table. Then fleet utilization increased to 85%, but again, if we use the adjusted utilization, it was 91%. It's a really good number. When you see anything above 90%, it's just exceptional performance, in my opinion. EBITDA, which is probably the most important, how the company operates effectively or not. So this is not the earnings but the EBITDA is important one, because for the capital heavy business, depreciation and amortization means a lot. Because with the time, these heavy assets depreciate a lot, and we deduct this money from the income statement. However, it's not that company loses that money. So speaking about the EBITDA for Q2 2026, again more than doubled to 161 million, an increase of 83 million euros compared to same period last year. And yeah, this slide shows a bit better the numbers. Look, this is what's the core revenue, because if you check the data in a typical screeners like TradingView or stockanalysis.com, you'll see this number, and you might think that the revenue didn't increase that much, but the actual core revenue last year was this one again. So, and that's why the revenue increase was more than 100%, actually 132. Again, utilization means a lot, 90% plus. EBITDA, again, from 78 to 160, more than doubled. And this is the mark that the numbers shown in the presentation are before acquisition of MENCK, and therefore excluding MENCK financial numbers. Net profit jumped 73%. Backlog increased again 23%. So wherever you look, the company executes really well and still being able to invest a lot. Now let's have a look at the probably the most important part of the earnings release. That's usually what the investors are looking for the most in the earnings, is the outlook for the year end. And the company actually reaffirmed their guidance. They still project the revenue to be within this range. Let it be roughly 900 million of euros, and the EBITDA roughly 460 million. If we have a look what they've earned for the first half, it means the second half of the year will be stronger revenue wise and EBITDA wise. But what's important here, have a look. The full year outlook for 2026 and financial numbers do not reflect the acquisition of MENCK in August 2026. Just to remind you that the MENCK was a private company and there were no numbers in terms of revenue and profit being shared with the public, but we could make some projections. At least that's what I asked Google Gemini, if we can find out roughly what we might expect additional to the revenue guidance. That's what Google Gemini says, that because the acquisition closed on August 11, the Cadeler will consolidate approximately 4.5 months, so 37.5% of the year, of MENCK's operational results into its full year 2026 financial report. So Gemini made some calculations, and what I see from here, again, we cannot rely on this information like 100%, but we might expect something similar, that the estimated consolidated MENCK acquisition will give additional roughly 50 million of euros to the revenue of Cadeler, which will bring the projected updated 2026 revenue closer to 1 billion euros. Again, the company with the capitalization roughly 2.5 billion euros. Wait a second, 2 billion euros. So that's half of the company capitalization. And EBITDA, again, it's adding additional roughly 15 to 20 million. It means that it will add additional 5-6% to the company, and we consider that this will be only for roughly 4 months of this year. That means that the next year, starting from the next year when it's gonna be full earnings year, the MENCK will contribute much more to the Cadeler. Then, what does actually companies see from the market? Because they make their projections again based on the market conditions. And who else knows better than the company which works in this area? And let's see what they are saying about it. They say that the market momentum continues, and that's what I want to see when investing in this company. And again, it's worth mentioning that market momentum continues even when one of the greatest economies, or if not the best economy in the world, USA, almost does not contribute to this energy segment, to the wind energy. And who knows, maybe in 2 years from now, if the leadership changes in US, it might add additional numbers later on. Authorities adjusting support schemes leading to improved conditions and better auction results. Global need for electricity is on the rise, and that's no doubts, especially with all these AI data centers build out. We clearly see that the energy trend or super cycle is in acceleration phase. And that's why offshore wind will be an essential part of the solution. Then I've highlighted here this point: the positive momentum continues to build as focus in Europe gradually shifting towards the market post 2030. We expect strong growth beyond 2030. And that's the reason why the company is investing at this moment. We are in 2026 and the second half of it, and the company is preparing for the high demand of these vessels, and they see how demand from the energy companies is growing to build offshore wind, and that's why the company is early in their investments, and that's what I like about it. Then long-term visibility significantly improved. Again, we are hearing this from the company which is the primary source of information in this field, so I don't see any objections why I don't have to trust it. They're saying that authorities are adjusting auction timelines and frameworks to reflect evolving market conditions. So basically they're saying that the governments and authorities are trying to help the market. By the end of August, the capacity awarded globally has already exceeded the total awarded volume in 2025. And that's what we can see here, that the awarded capacity already more than 2025 in 2025, and that's also a potential one that we can expect by the end of this year. So saying that the total volume in 2026 could reach 30 gigawatts. Let's have a look at the current situation in the market for this specific fleet, and you can see that the Cadeler has the largest fleet of vessels capable of efficient installation and operation and maintenance of wind turbines and foundations. So the company actually has at the moment 11 vessels. They mentioned here 10 just because the report is for the first half of the year, and then they delivered 11th vessel. And then the company expects 3 more vessels to be delivered. And these are the competitors of the Cadeler. Have a look. Next comes Dimi Group. Also, if we go to this diagram where they mention the fleet of vessels capable of efficient installation and operation and maintenance of wind turbines and foundations, the Cadeler is a clear winner here. It will have 9 vessels capable efficiently do this kind of work. So this and the previous slides basically saying that Cadeler is a definite leader in the market, and considering that the demand is expected to grow faster than the supply of the vessels, the Cadeler is a clear winner. And that's why, again, that's the second point why I'm still holding the company and looking to the future. It's a clear winner of the situation. Again, a lot of risks are involved, so we are speaking about the future where anything can happen. Who knows, maybe wind energy suddenly will not be needed to anyone and will be considered to be not as green or too expensive, but that's what the company says. And again, they are not just saying that, they are putting their money where their mouth is, and they are investing a lot. Why wouldn't I trust? No idea. So the key points from this slide, that the increasing undersupply of capable vessels in the market is expected, especially from 2030 and onwards, particularly for efficient vessels. And let's remember that Cadeler has extremely young fleet. More than half of the fleet are the new builds. And the typical life of the ship exceeds 20-25 years. And what they mention here, that new capacity is hard to add. Yards are at full capacity. By the way, I was listening to the webcast yesterday. I wanted to share what CEO and CFO were saying to us, but their sound was so bad, to be honest. Obviously they won't hear my presentation in YouTube here, but in case they will, guys, please use the microphone at least. But it's not the point. The point was that they were mentioning that it was so hard to agree with the shipyard, COSCO shipyard, for the delivery of 2 T-class vessels, that the yards are fully occupied, and which tells me that the competitors won't be able to build the ships suddenly if they would like to do so. And that's why, again, I see as the Cadeler is trying to be proactive rather than reactive. And look at the chart here. This one, expected vessel demand, the foundation installation vessel, the blue line, which is growing, and the expectation of the total vessel supply here is actually going down, just because the ships they are aging, and the other companies have not so young fleet as the Cadeler has. What else they mentioned, that the acquisition of MENCK supports Cadeler's ambition to execute up to 5 foundation projects in parallel. I did not add anything about this MENCK company here. Basically, the company has different kinds of the hydraulic hammers and other specialized equipment which is used when the foundation for the wind turbine are being installed offshore. And this equipment also is very critical to build the turbines offshore. And also you can see it was added to the chart that the demand will be growing, but the supply shows like steady. However, for me, being honest, I don't really see why the hydraulic hammers can be built by other companies. It's not that sophisticated as to build a new vessel, but who knows, maybe other companies are not focused at this point. But anyway, the company mentioned that it will basically increase the efficiency of the Cadeler and also reduce the reliance on the third party when they execute their projects. Probably the last slide from their earnings presentation. They are highlighting here what their plan for this year, how they plan to grow, and they mentioned 3 steps that they've been doing. So again, as we mentioned, 2 new T-class vessels. The deal was done with the shipyard, and we expect those to be delivered in 2030, 2031. And then again, acquisition of MENCK and supporting growth ambitions of the industry brings mission critical equipment in-house, directly supporting our ambitions in foundations, installations and growth of fleet. Well, to sum up, for me the earnings was great. They delivered as expected and they reaffirmed the guidance. They again showed that they are very committed to progress further based on the data they have that from 2030 and above the market will grow more than the supply exists. That's why I'd like to mention that this company is worth having in the portfolio, only looking at the long term and also being ready for potential risks. And obviously there are risks when you hold this company. First of all, the capitalization is small, so the stock can go up or down based on any geopolitical news. And obviously stock is something different to the business, but the risks for the business are that first of all, it's a capital heavy business, and obviously it involves a huge debt usually. And also the company now, at least I see how the risks are being reduced by the fleet size, because if we have a look at what was 1 year ago, the company had 7 vessels, and if any one of those will have some breakdown, it would strongly influence the financially the business, because one of 7th vessel going down, it's around what, 15% or so. Now when the company has 11 vessels, if one of them has some damage or something, it's just less than 10%. Again, the risks are the execution. The projects can be delayed, but this, in my opinion, is already included in the price, because the stock is traded at such low valuation. I think it's around price to equity around 7 or so for now, and for the company which is growing more than 100% revenue and EBITDA for the last few years and expected to grow for the next decade, I think all of the risks are involved in the stock price already. And also I think that the company is not yet that popular just because it's based in Denmark. Yes, it's also listed in the US stock exchange, but it's not widely known. And as far as I know, in US, still the rhetorics about the wind energy is so negative that people don't even look at this area or this energy segment at all. And that's why I think now is the best time for me to have to or to build this position. I've already built it, so I have a full size position. I'll show you. So that's today's stock chart, and the company, the stock sits at around 60 Norwegian crowns. Yes, the main listing is in Oslo Stock Exchange. So yesterday, after the earnings, the stock went up roughly 8%. So I've started to build the position when the stock was in 40s, I think 42 or so, and I was building it on the way up. And it's already full size, so I'm not going to add anything, but I'm definitely holding it with the time horizon for at least next 5 years or so. And I believe the wind energy will be remembered in a few years, even in United States and everywhere else, when it's gonna be like clear bottleneck the world economy. And that's what's going on now. I see widely how the companies are trying to secure the gigawatts of energy for their data centers. And also, when I track what the activity among the renewables, I can see how the hyperscalers like Amazon, Google, Microsoft are securing the gigawatts of electricity from the wind energy. So it's definitely there. I can see that the contracts are being awarded, and wind energy is growing as such, and the Cadeler is the clear winner in my opinion, which involves some risks. Again guys, it's not recommendation at all for you to buy, to sell, or to hold the company. I'm just sharing my thoughts, my thought process about this company, why I hold it, my thesis behind it, which risks do I see. And please do your own research. And by the way, if you follow also this company, please share your thoughts about it. I would be glad to see from you what I've missed. Probably maybe there are some more risks that I don't consider, or even some more potential catalysts that I don't speak about. I would be glad to hear some feedback from you. So yeah, appreciate your time being with me, for your attention, and would be glad to any of your comments. And I'll see you in the next video. Goodbye.